And the end of that music and the legalese means we're ready for another episode of Trade Masters. I love Trade Masters. It makes me money. How do I not like it? And it makes me money because two expert, experienced technicians, trade analyzers, individuals I know that have been around the market and made many good trade over the years, come in and give their best ideas midweek. 5 ideas each. They bring them to us as a community, and then we get to decide which ones we do. And it has just been a plethora of great ideas in the 6 months we've been doing this. I love it. I don't even do any work on my own on Wednesday night, to be honest, because there's always some good picks for me to choose. Very excited to have Tyler and Greg matching off again. Now, listen, gentlemen, this market don't want to do anything. Did you guys find some good trade setups in a do-nothing market?
You betcha.
Yeah.
I got a lot.
Greg,
I got a lot.
I'm guessing you didn't bring AMC as one of your picks.
What's that again?
The Dogecoin of stocks.
Yeah, no. Hey, if the theaters aren't open here, I'm not trading it. So,
listen, I'm excited to see what you got. I mean, because I'm excited. No matter what the market conditions are, whether they're down, whether it's a nice trend, whether it's trading a little bit sideways in recent weeks, I just love because you guys are always spot on with your analysis. And let's get going. Let's get going. Greg, as defending champ, and you just have Tyler's number lately. You just do. Who goes first?
my buddy Tyler, he always steps up to the plate hard, so I'll let him go first.
All right, sounds good. So we've talked a lot about energy recently. You had a breakout in crude oil. You had a breakout in the energy sector. I'm sure Greg, maybe I'm being presumptuous. I suspect Greg may have an energy pick somewhere in there today. So I'm going to get mine in first. There are plenty of compelling setups in the energy sector. And I like Phillips 66, PSX. If you look at this on a weekly chart, you have a long-term, you got a lot of things here, don't you, Mark? You got a little double bottom last year. I was looking at this cup and handle pattern, and the handle on the weekly chart is a cup and handle on the daily. So you have a cup and handle within a cup and handle, pattern within a pattern. You have a clear and obvious resistance level at $90. Gives me a clear entry point. You have room to 100. $100 is not only a big round number, it's also, I don't know, old resistance. And I think it'll act as a magnet. So I'm looking for a $10 move in PSX over the next couple of weeks, maybe the next month. And I'm going to keep this pretty simple. I'm actually going to just buy a 90 call, an at-the-money call option, has about a 50 delta. And I'm going to sell the 100 call, has about a 25 delta. So that'll give me a net delta 25, which is what we look for on a vertical debit spread. And the cost is pretty low. So if I did this for August to give it a little bit of time to get there, you buy the 90 for $5, you sell the 100 for almost $2. I'm paying $3.30 for a $10 spread. So risking $3.30 to make $6.70, which is a really good risk reward for this type of structure.
You know, like I was going to be shocked if, and I doubt this will be the last energy pick, right? Because even when the market does nothing, that doesn't mean that certain areas of the market are doing nothing. And energy certainly has been strong, crude oil breaking out. I mean, we've been very pro energy, especially from a cash flow perspective. I mean, do you see any cash flow opportunities here? I mean, you presented a directional play, and your trigger would be above what, today's high? I mean, you know, 10% above today's high or something like that. You know,
you do 90.59 is I think the highest it got. Today's high was 89.75. So somewhere in the next dollar, around 90, breaking $90 is where I would trigger. As far as cash flow, if I was going to do a cash flow play, I would do it on the XLE. I think it's a cleaner, easier play than PSX. I do a bull call diagonal in XLE.
Okay, got it. I mean, I was going to be shocked if there wouldn't be at least one energy play tonight. It's just too strong an area of the market. It's really solid play. You're betting on directional movement, but there are also good energy has been a wonderful cash flow all year long. So I mean, The only thing I ever get concerned with energy is the timing, right? Because that's got people over the last couple months where cash flow it hasn't gotten anybody. I mean, that's just maybe it's my own personal bias on that. So, but a fine way to start the show. Greg, what do you got for us? Round one.
All right, well, we're going to slug her out blow for blow here with Tyler because I'm going the energy space too, just because he did. But I like APA. You pull that up for me, Ty Guy. Thank you, sir. So cup and handle pattern here. Love this thing. It's a cheap stock. Its options are actually not half bad either, which is good. Energy looking strong. We're at a 24 breakout level here. Just there's nothing not to like. But what's more to like is if you go to the weekly chart, if we break this 24 level that's here, we are on our way to anywhere from 28 to 30 with very, very little resistance. So I really like the move, especially being the ATR on this thing, I think is like 60 cents or something, if I remember correctly. So we've got opportunity here for sure. Kind of a cup and handle in a cup and handle, as Tyler said here as well. So what I like here is July bull call, 22.50. So we're going in the money. Buying the 22.50, selling the 27.50. $1.72 to make what, $5 spread. So you're about 2 to 1 there anyway. You're pretty close anyway. So I like that. There's a couple other things that I like about this. One of the things that I like is the $28 target, like I said, so it's got room to run. The other part is I like that implied volatility is actually starting to rise on this. Now, I know you don't have your imp volume on there, Tyler, but it is starting to curl up from the bottom, which is going to make our long options worth even more than they are. So we're getting them we're getting in at a decent price, but we could get a little assist from the volatility as well. So cheap stock, cheap option play. It's going to fit a lot of people's risk reward. Just a good pattern, good setup. Volatility's in the right place. I just love this little trade.
You both came with directional plays in energy to lead off. I mean, is it just that obvious how strong energy is right now with everything? I mean, is it just like is writing on the wall, so to speak, out there?
It's like if you look at anything like XOM and Chevron and any of these things, look at actually PBR. Go to PBR, Tyler. Look at that thing, right? Anything remotely related to energy is just blasting off. So when you've got these setups there available, why wouldn't you take advantage of them, right? Like it's showing you as much strength as we're seeing, as far as I'm concerned, in almost any area of the market, to be honest with you.
And so I mean, when something's hot, go directional, take advantage of price movement, fix risk, we'll call spreads. I mean, it's almost expert advice. Well done, Greg. You got a joke for us today?
I do. I got a few actually. So I poured root beer in a square glass. Now I just have beer.
I poured root beer
in a square glass.
I don't mind that one, actually.
It's a thinking man's joke.
Yeah, it took me a second.
Grade 9 math.
I was like, root, square root. All right. I got it. The square root beer. Okay. Listen, I'm a nerd. I like it. I love both the picks too. Listen, I was talking to an individual today who had very little energy exposure, and energy has just been such a wonderful, just part of a person's portfolio lately over the last year, especially from a cash flow. And I don't think it's done. I think that, I think we're going to be paying higher prices at the pump and, all of that stuff. And I wouldn't be shocked if we see some strong directional movement in the next little bit in the energy space. So, all right, Tyler. All right. So we all love energy and you guys love it directionally. What do you got for us round two?
All right. So we've seen some of these meme stocks wake up. You referenced AMC and so AMC, just so everybody knows, is gone bonkers. Greg, if you didn't see, it was up 100% today. But you also had like BlackBerry was up 32%, Bed Bath and Beyond was up 62%. So some of these beaten down retailers, if you're just Bed Bath and Beyond, for instance, last January that participated. So long story short, I was looking at retail saying I don't want to chase these, but if there's renewed interest in the retail space, I want to see if I can participate somehow. So I was looking at the retail ETF XRT, and when we last had this swarming in retail, this was back in January, February. This thing popped. It's knocking on the door of a potential resistance zone here, and I'm kind of interested. Got a lot of overhead supply in this $95 level, and you had a nice hammer candle today with decent volume. If we get a breakout, I think this could make a run for 100. And because this is more of a momentum fueled play, I don't think I want to fiddle with a cash flow trade. I think I want to stick with the directional. If it works, I want the potential upside. I want a higher profit potential trade. If it doesn't work, I'd probably get out relatively quick anyways. And I think that dynamic just supports more of like a bull call spread. So similar logic on the structure to PSX, just looking to buy like an at the money 95 call, sell the 100, and just look for a pop to 100. So if we take a look, I would go to July. And now that I look at this, I actually hate those bid-ask spreads. So JK, I would probably just buy the stock if I was going to play this. I wouldn't do options. I would just buy the stock over today's high, maybe stop below the 9 EMA, and look for a pop to 100. So I'm punting on the option idea, and I'm just going with a stock play on a breakout on XRT.
You've picked two patterns tonight that had multiple tests of resistance that are finally breaking, and spread out over many months, now breaking out. A pattern that takes a while to develop, but you're seeing breakouts on both.
Mm-hmm.
And so you call it retail, I call it underbelly. It has been those type of meme type stocks. They've woken up over the last 5-6 trading sessions.
Yep.
Now, obviously, it's going to have its ebbs and flows and break back down eventually. Some point, we know the song and dance, but it can create some. And I like the conservative route you've went. That has some of the names, right? But is more conservative across the board that could benefit, but could independently benefit, even if that fizzles out sooner than later. So I like that. And trigger above the high spread, nice directional play.
It wants $100. I think it gets there.
Listen, you're never going to get me to complain about things that trade sideways for a few months and then you get a breakout signal. I love those patterns a lot. I just wish they happened more often, but you found two of them today. All right, Greg, round two. What do you got for us?
All right, since he brought a stock play, I guess I'll do the same out of my list here. DDD, please. Triple D. All right, so showing strength here. We've got our reversal probably about 2.5, 3 weeks ago from this downtrend, making all the right moves, just like Tom Cruise. Anyway, moving its way up. We're now at a resistance level, right where that sits right about now. Yeah, somewhere in that neighborhood, 33.5, 34. So just looking at a breakout here. This is a cup and handle pattern as well. What I really like here is the room to run. Should this get above here, you've got your next resistance is at 40 there. If you look on the weekly chart, this thing looks fantastic as well. Okay, so it had a real huge beat down, and then all of a sudden signs of life well above the 20, sitting at that old support resistance zone. And I like this one here. It's a $32 stock. It's a stock play. I didn't even entertain the options. I didn't even look to see if they were any good or not, because I thought for a $32 stock, I'd love to play this and get this to run up to that 40 level, and a nice little $8 move there. Just an easy play here. We're just looking for your garden variety breakout with nothing behind it. So I really like the reaction this has had since it's made its turn from the beatdown that it took. And again, the weekly chart looks so pretty to me that this is just something that had to go on the list.
Yeah, and Tyler, you had 3D a couple weeks ago, right?
Mhm.
Here on this very show. When I talk about the making money and outstanding picks, I mean, Tyler had it on the reversal a couple weeks ago. Obviously, it's played out well. You know, Greg's bringing it, you know, with room to run, and there is room to run, right? And 3D is kind of, for me, one of those in between. I like the story of 3D. I like the industry in 3D, but it's been caught up in some of the parabolic moves. And listen, these stocks can run. These stocks can run, and so I like the directional play here a lot. 4 great picks, you know, 6 more to go. I have no doubt that I'm going to enjoy each and every one of them. I always wonder if I'm going to enjoy the joke that Greg brings.
All right,
What do you got for us?
husband and wife are sitting on the couch watching TV. The wife looks at the husband and he is staring at the ceiling above her head. She looks up and asks, "What are you staring at?" "A spider," he replies. She says, "I don't see anything." "Oh, it must have fallen on your head," he said calmly. The wife jumps up screaming. The man says, "While you're up, can you get me another beer?"
I'm sensing a theme with these jokes.
There might be there, Tyler. There might be.
I don't mind that one at all, at all. All right, Tyler, what do you got for us?
All right, I'm struggling narrowing these down. I have quite a few picks for tonight. I'm gonna go with an area that is not as obvious right now. I find this little base in the tech sector interesting. Remember, tech has kind of been out of favor. Growth has kind of been out of favor. Recently, we've seen a little bit of a comeback in semiconductors. We've spotlighted a few here in Trade Masters, but I was looking at XLK, and you've got a pretty obvious little base here, breakout, over 139 and change. So this pattern had me looking at tech-related names, and I was looking at Google. And I kind of like the look here. I like the little cup. I like the handle. You can also call this a high base. This has gone sideways for the last 6 bars. The 9 EMA is caught up. You're at a whole round number here around 2,400. I think that if this can take out resistance at 2,400, maybe that coincides with a breakout in tech stocks. You get a little momentum behind growth. I could see a quick trip up to maybe 2,500 for Google. I don't mind a stock trade on this because it's expensive. If you want to make it cheaper, I like doing an out of the money bull call spread. Something like buying at 24.50, selling at 24.70, something like that. If you take a look, you can kind of determine the cost, or you can control the cost depending on the spread width. So if you take a look here, once you get past, so again, we're looking like 2,400 to 2,500 is the move. If you look at the strikes, most of them are in 20-point increments. So like I could see somebody saying, okay, I'll buy the 24.60, sell the 24.80, something like that. If you wanted to go a little bit more directional, you're paying $5.70 for a 20-point spread. And 24.80 is not all that far away, to be honest, if you get a decent upswing. So you could do something aggressive, like an out of the money bull call, or you could say, no, I'm going to go a little closer. Let me do a $10 spread. Let me buy the 24.40, sell the 24.50. You're paying $3.55 for a $10 spread. You can build some I think decent risk rewards out of money bull call going to July for Google. And I'd probably stop out. I'd stop under the 9 EMA. Me, I'd do more like the 20 SMA. I think the risk reward's decent. And it's not easy to find really good setups in the tech sector. So I was impressed with Google's leadership, it being relatively strong at its high, while the sector's, hasn't fully recovered.
Will you show me XLC and XLK? I mean, whenever I'm evaluating one of the big boys, I always like to do a cross comparison. I mean, because obviously communications and tech are different sectors, but man, they sure do seem to run together quite a bit.
Yep.
And so we got strength, potential breakout, and okay.
And then XLK is a little bit of lagging in XLK.
A little bit of lagging, but taking the same period of time off with the whole market, right?
Yep.
Just happening in the middle of the range versus the top of the range. Tech and communications have been, it's funny because when you look at the trends, especially in communications over the last 6 months, that's a solid trend, right? In Google, that's a solid trend. Why has Google been under the radar? Because when people talk about some of the big tech names, they're like, oh, it's been trading sideways, neutrality. Google hasn't. How come Google's been so under the radar?
It could be because it's a harder stock to trade given the higher share price, right? I don't think this is near as popular as Apple or Microsoft, right? I think the higher price could be maybe a deterrent for people. It's also, in fairness, it has been a little bit messy. Like if I look at the last month, like when's the last time I would have traded this? Honestly, the cleanest setup was the breakout back in April. It's been 2 months since you've had a clean, what I think is a clean pattern. This might be the first time I would have been interested based on the chart, just because the pullback was a little gappy. Maybe that's part of it too, with the cleanliness of the pattern.
The one thing I have liked about all three of your trade setups tonight is very clean resistance levels. Not a whole lot of choppiness to any of the resistance levels. Pretty clean. Solid pick, solid analysis. Greg, we're halfway through, but you got 3 picks left. What's your next one?
Buddy. Yeah, so I'm gonna change things up here. A little bit of directional from Tyler there. I'm actually gonna do a cash flow play here. If we can go to Verizon for me there, Tyler. So Verizon's had its little pullback from its highs up around the 60 level there recently. I like how it's basing out here, trying to work its way back into favor here. Really, the reality is this thing is a very sideways. It's not a flashy stock. It's a good dividend paying stock, which I like a lot. But I just like where this is at right now. I like that it's holding the current support level that it's on. And I still think that this has got at least another run back up to 60. Like I said, if it doesn't, the way that I like to structure these particular trades is I like to have a plan made where I know what I'm going to do if this trade goes against me. I know what I'm going to do if it goes for me, and I know what I'm going to do if it goes sideways. So I have options for all three of those things. So for me, what I was looking here today was just a July 9th bull put spread. So the July 9th bull put spread, so 37 days, and selling the 54 and buying the 50. So $4 wide spread. Now that credit says 31. As you can see after hours, these spreads get a little bit weird. During the day, that was 40 cents. And that is the way that I would also play this. Tomorrow, I would put this in as a limit of 40 cents. If I got filled, great. If I didn't, not interested in the trade. Our rules are we need 10% of the spread. And honestly, I think you get that 40 tomorrow. You'll see these bid asks tighten up a little bit, and buying the protection will cost usually a little bit less than what we've got spread there. So just a kind of a simple cash flow trade here. Now the way to think about this in my estimation is, what are you going to do if it goes against you? So you've got a bunch of options. If it goes against you and it gets down to the 54, which is the old support level, if it gets down there and you don't like how it's looking, you can just close out the whole trade and just be done with it. If it gets down that far and there's some time left and you wanted to, buy back the long, close the long, take a little bit of capital out of the trade and then take possession of the stock. Well, 54 is not a bad level to own Verizon at anyway. So there's that option. Then you can also do hedging and all that other kind of stuff when it comes to the credit spreads. I just like this as a neutral kind of sideways move. We've had a little bit of choppiness sideways recently, and cash flow plays have just been working just really, really well. Obviously, there's areas of the market where directional's still working, but really, if you look at the big indexes, they've been going sideways for a couple of weeks now, right? So like I said, for me, just kind of changing it up a little bit, little cash flow play, only interested if I can get 10% of the spread. If you can, then I think this is a real decent play. again, pulling back to that 54 support level, which is where it's been basically above that for a year now.
Which one of you brought up Verizon a couple weeks ago? That was you, Tyler, wasn't it? And what was your play a couple weeks ago? I mean, it was a cash flow play too.
It was selling a naked put.
Naked put.
Mm-hmm.
You know, and that's the thing about like bull put spreads. You know, it's an advanced technique, and new traders oftentimes do. I mean, they're convertible, right? You know, you can take ownership and have the put be as a protection in case things spin out of control in the short term. But listen, Verizon is a favorite cash flow of mine. Conservative, you know, would love to own it at 40. I mean, once again, Uncle Warren, if Uncle Warren's doing something, it can't be too shabby of idea. And not only is Warren Buffett doing, he's doing a lot of it. Like he's doing a lot of Verizon. And so, I mean, it's not a small position for him. And I've been pro Verizon for several years now myself. So, love it. Love it. All right. You know, you've kind of like made me like, you know, smile tonight, Greg, you know.
Well, let's see if I can do it one more time here. All right. A man has been in a hospital for a month. One day, he's so sick and tired of being in the hospital that he sneaks out and down to the nearest pub. He orders a beer and swallows the lot in 10 seconds flat. He then orders a second beer and does the same. Then a third, then a fourth. As he orders the fifth beer, he says to the barman, he says, "I shouldn't be drinking this with what I've got." The barman gasps in alarm. "What have you got?" To the hospital patient replies, "I've got no money."
I like what listen.
Beer jokes, boys, beer jokes. You can't go wrong with beer jokes.
Apparently, that's what I'm in the mood for tonight.
I thought I long ran out of new jokes. Apparently, I just missed the Googling of beer jokes, and it would have opened up a whole new door of jokes. So,
all right, Tyler. I love the picks tonight. Quality stuff. I'm serious too. I mean, this stuff from just a consumer standpoint, because that's how I view myself. I happen to be here as judge and jury, but really, I'm a consumer. As a consumer, I love the ideas. I get lazier every passing year, so I like ideas, especially midweek. So we got 4 more picks. Lead us off, Tyler.
all right, I'm going to give you a choice. I'm going. Yeah, I'll go. You got a directional play or a cash flow play?
I want cash flow. You giving me 3 directional plays. I want to see what you got on the cash flow side.
Okay. All right. GE got a little bull flag here. This had some good news last week and had a massive pop, really good volume. I love this type of pattern. We've highlighted this multiple times before, but I love when a stock breaks out. You know, and as far as breaking out, I mean, look, this was in a 2-month consolidation, and it just went crazy, and it's got a pretty good history, you know, of follow through on breakouts. So I like the trend, I like the break, and I like how the volume has receded back to normal as the stock has essentially consolidated in the upper third of that breakout bar. You can call it a bull flag, you can call it a breakout, but I just think any kind of weakness, this is a buy.
It's a pretty pattern.
Yeah, it's clean. It's clean. It reminds me of what I brought up Dick's Sporting Goods last week, right? Looking for some kind of flag or base after that breakout bar on earnings. It's exactly what it's done, right? So just as I like this type of price action after the gap, GE looks, I think, similar. So bottom line, I think given the breakout, at worst, I think it's sideways. At best, it grinds higher. So I was looking at building a cash flow play where I may be selling the 15 strike call option. This is a cheap enough stock where I wouldn't even mind a covered call, buying the stock and selling the call. If, you know, buying 100 shares of a $14 stock is just too rich for you, then you can very well just do a substitute by buying a call option instead of buying stock. So you could go to September, for instance, go buy like a 70 delta call, September 13 strike. Stock's only about $1.70. Then I could come in and sell you could do a 30-day, or you could even do the July. I think I was looking at the July monthly. The 15 strike call, get almost 30 cents. Now, one of the reasons why I like this is if I'm paying 17, I'd like to reduce the cost by at least 15, 20% or so, which this does. So I'd sell a July 15. It's a 30 delta covered call. Cut the trade cost down to about $1.38. So it's dirt cheap. And when you look at the risk graph, there we go. It essentially looks like a covered call. If the thing gets up towards 15, you're making $30 immediately, which is about a 20% return. At expiration, you could make upwards of like $75, like a 50% return. So that to me, I think is a pretty good trade structure if you think GE works its way higher.
No, it's solid. I love the situation. I love a naked put in this situation. What were you getting on those? Because I like this because you said 2 months. It's been like almost 3 months where essentially GE's traded sideways.
Yep.
Informed not the cleanest support level, but a general support level in the 12 to 13. Ford Motor looks a lot the same.
Yep.
With the choppy market conditions, and then. Love the breakout of the thing. What am I getting for 13 July? Because I like the Julys because you're 44 days out, and that's kind of my sweet spot.
It's a sweet spot.
Getting a little bit of change, right? So there's a couple different ways
$21, but hey, they're only making you put up 175. So I mean, dollar-wise, it doesn't seem like a lot, but it is a 10% return. So I wouldn't fault somebody for that higher probability as well. I think it's sufficient selling that 13.
I like the chart. I think there's a lot of ways to play this. Like the chart a lot.
And industrial XLI's been hot, right? I mean, it's in a good sector too. So I agree.
Nope, lots of ways to play this. Nice conservative play with room to run on GE. Greg, good show so far. Expecting nothing less.
All right, so since Tyler gave you your choose your own adventure, I'm going to do the same things. What do you like better?
Choose your own adventure. It's a fun game. I like it.
What do you like better, kitty cats or airplanes?
I love cats a lot, and I hate flying. Although airlines have treated me very well from an investing standpoint the last year.
All right, well let's go with kitty cats.
I do love cats a lot.
Let's go to Caterpillar. So no mystery here, no magic here. Waiting for a breakout. This thing's been strong. Industrials have been strong. If we look at this pattern a little bit long term, you can go to the 3-year weekly for me there, Ty Guy. Just look at this thing, just unbelievable. It's on a slope. You'll notice the slope of the moving averages there. It's on a slope that's sustainable. It's not in a parabolic movement. It's not, it's not this massive volume that we expect to pull back at some time. It's just doing its thing. And so we want to be part of that thing. And so looking at this one here, this was a very simple call. It's directional in nature. The volatility is low. The implied volatility is low. So we're looking directional nature. I'm looking for this breakout of the 245 area here. Very simple July bull call, the 250, 260. A very reasonable dollar amount for this particular trade. Getting to 260 is not a problem at all for this particular stock. So you look at the 250, sell the 260 there. You're 285 for $10 wide. So you're more than 2.5. And like I said, this thing, if it gets above 245, there's really nothing slowing it down. And as we've seen going on here, it just keeps chugging along. The other part to that, if you weren't so directional on this, which this has been treating us pretty well directionally speaking, this could also be another one where I would entertain, going out longer term and doing a diagonal spread as well. That's also a trade that can work for here, especially due to this current pattern and the way it's been treating us. Also with industrials being strong, I just really like where this thing is headed.
Yeah, no, I mean, and while it's not a multi-month consolidation pattern, I mean, it took a couple months off and then a little leg up, right? I mean, you don't have a lot of price movement, nothing outlandish. I mean, that's the thing. If you can catch an AMC breakout, great, good for you, as long as you know when to close it. I like stocks that have taken some time off because, I mean, even if you look at AMC took some time off before its big run. I think that lulling, that cooling off period, that whatever you want to call it, preceding a breakout, is critical you know, in the current market conditions. I mean, I think it builds up a lot of energy. Like the pick. I mean, tonight's been great. I got more choices than I know what to do. I could call it good right now because I can't place all 8 trades, and I love them all. But I'm going to get you 2 more because you guys oftentimes are sneaky and sometimes save your best one for last. Close strong. What do you got for us, Greg? You've been 3 for 3 on jokes. You've never went 5 for 5 with me. Ever.
Yeah, maybe tonight's the night.
Maybe tonight. Like, man, let's roll those dice. See what we got.
All right. 5-year-old little Johnny was lost. So he went up to a policeman and said, "I've lost my dad." The policeman said, "What's he like?" And little Johnny replied, "Beer and women."
Not too bad. Not too bad. All right, listen, lots of good picks tonight. Seriously, lots of good picks tonight. Tyler, you got 1 pick left. I know you were complaining before the show that you had more picks than you knew what to do with. Well, you only can use 1 more. What is it?
I'm okay. So I'll go with one thing. I think you'll notice, for those that have watched this for weeks and weeks and weeks on end, is we do often revisit the same stocks. And the takeaway is that when you have a good trend, there's no reason why you shouldn't keep going back to the well and extracting more profits. So this is a name that we've talked about before, but I like the setup going into next week, or tomorrow. Berkshire Hathaway, the financial sector has been quite hot. In fact, I was running the numbers today. XLF, if I'm not mistaken, is up like 30% year to date. That's an annual rate of 60%. In contrast, the S&P is up like 12. So you've seen stark outperformance in financials, and the financial sector had a little breakout here recently. I just like the cleanliness again of this little base going on in BRKB, close to $300. Just like on PSX running from 90 to 100, I think this thing can go from 290 to 300. And it's just taking its time to kind of digest this previous big gain. And breakouts have been money in Berkshire Hathaway for the whole year. So I like this on a push over. I would ignore the wick, and I would just do a break over yesterday's high, which is about 292. That would be my trigger. And I think, options are cheap on this thing. So I think you could do a bull call vertical if you wanted to go more directional. But bull call diagonals have been just a layup for the whole year. So if you wanted it to be a little bit more cash flow oriented, I do like a diagonal, just going to be a little bit more expensive. So, Mark, you tell me which one you want me to build, because I actually like them both.
Dude, this decision is so close. I'm not gonna let you get away with that. I'm gonna make you
fair enough. I'll do the well, let me see on the pricing actually. So I have to sell. I have to buy September if I'm going to do a diagonal. It's 100 days out. If it's overly expensive, see, to buy like a 60 delta, I got to put up $1,400. I don't think I want to do that. So because of the cost, I either have to like this enough to do a vertical bull call, or I just wouldn't do it. So I would go to July. I would buy it at 290. So similar logic to the PSX that I let off with. I'd buy the 290. I'd sell the 300. Pay $4 to make $10 spread. That's a pretty easy, I think, clean trade there for me. The net delta is also not bad. It's a little less than 25, but I think it's good enough for a slow mover like Berkshire Hathaway.
No, and I actually didn't know. I knew financials had outperformed. I didn't know they had outperformed by that much. We've all been big fans of financial. I mean, it's been an easy thing. I continue to like them, in a raising interest rate environment, because people want to invest, and it doesn't mean you can't have bear market. We'll eventually have one, maybe have one this year. Who knows, right? It's always one around the corner. But I just like financials, no matter how the inflation story plays out. I think they can maybe in one hand go neutral. The other one, I think they can be used as defensive. I don't know. I like financials a lot right now.
Yeah.
I got a question for you. Over the next 7 months, so end of 2021, what do you like better, financials or energy? Because I was debating that internally today.
That's a good question. I like if you look, I mean, I would look at long-term charts to get my bearings here. So financials, if I'm not mistaken, are at an all-time high. Yeah, I mean they're above 2007 highs. Energy is obviously not even close. So I think if you look at who has, I think if you're going for like the value catch-up thing, I think you go for XLE. If you don't, shoot, I mean, I don't have a strong opinion here, but I think the logic would have to be if you want to play catch up and go with the undervalued, lower PE ratio, maybe more potential upside, probably XLE. If you're just going with strength and you reward relative strength and you go with leaders and you bet on them, I think you'd go with XLF.
Yeah, because what about you, Greg?
Yeah, well, I'm always a proponent of value, and so I see more value in the energy sector myself. I think it's still got to play a lot more catch up yet. Obviously, financials is running. Obviously, the inflation, conversation comes in there. I think financials has just run, like, it's been a good run. Don't get me wrong. It's run a lot, and really, I look at the angle, and I know this is a monthly chart, so that's going to have some bearing on it. But I look at the angle of this ascension, and that gets me a little bit concerned. It's not parabolic by any means, but it's on an aggressive slope. For me, that means it needs a breather at some point. Like I said, with so much catch up to do in the energy space, I like the opportunities that energy can provide versus, I think there's probably just a little less in the tank for financials than there is energy.
Well, one other thing I was thinking about, Greg was saying that, is the dividend yields in energy is still really juicy, right? So if they just went sideways for the next 6 months or the next year, you're also getting paid more for waiting than you are in financials right now.
Yeah, I mean, it's just because I love them both for 2021. And I was just, I was looking to do some bulk call spreads. I was like, listen, I like both these areas. Let's see if one of them takes off. In the area, maybe not the index, but some, and you guys provided me some ideas in that realm. And it's just like, but you can't trade everything, right? And it's not that you can't have exposure in both, but I just like, if I were going to do one more in one than the other, I was just having that little debate. So I wanted to get you guys' input on it. All right, Greg, we got one pick to go. It's been a great show. Lots to go. I mean, seriously, it's one of those, I can't do them all. And I got some cash and I want to put it to work tomorrow in some way. And you've given me excellent choices to debate. Give me one more choice to debate, Greg.
All right. Well, I told Tyler in the pre-prep here that I was going to throw a curveball today, and that is what I'm going to do now. Can we go to MKC, my friend? Thank you, Tyler. MKC.
Sorry.
MKC, yeah. There we go. McCormick's and Company. Can you zoom out to the 3-year weekly? All right. So looking at the 3-year weekly, now do me a favor and zoom out to like the 10 or the 20-year weekly. So looking at this stock and the way it's sitting and the way it's been moving for the last 20 years, this is one of the stocks that's always been on my radar. They're a confectionery company. They're very solid. They're a decent dividend payer. Just to throw some numbers at you for the dividend, their dividend is only about 1.5%, but they've been paying dividends since 1925, and they have over 20 years of consecutive dividend increases as well. So with this play here that I'm looking at, if we go back to the daily chart there, Ty. So with this play here, I like where it's sitting right now. It's a little bit sideways. I think there's some upside potential to it. But what I really like about this here, I actually looked to build a directional trade, but I just couldn't find the right one. So what I did instead was I thought, okay, can I cash flow from something as solid as McCormick with the history that I've just showed you, with the dividend, information intact. So what I did was I looked at the naked 85 put. Go going out to, I believe it was July that I looked at. So the 85 put's going to get you over $1. So you're going to get you about $1.05 or $1.10. So you're getting $1.10 to buy this particular stock at 85 bucks. Now, this to me is a position trade or even an investment. I know we typically do swing trades here, but this is why I said I was throwing the curveball. This to me is something that I like to own. It's got a great history to it. It's got a lot of solid, fundamentals behind it. And it's at an opportunity now where I believe that we've still got some more upside to it. It's working its way sideways right now, but I believe that we're slowly moving higher. So I think there's a potential for a little bit of growth here. But for me, it's a cash flow play where my trade plan would involve taking possession of the stock if it got down to 85. 85 is a pretty important level. If we go again back out to that 3-year weekly, you'll see that at 85 was old resistance there, became new support, and this could be the next leg up for this particular equity. So, like I said, just a little dividend kind of position trade, more so than our typical swing trades here. I really like McCormick. I think it's got a lot of pluses to it, and I think it's in an area where we can create some cash flow out of it.
Do you know that McCormick has not broke the 30 monthly moving average since 2011? Do you know that the 30 monthly moving average is at around $84?
Mm-hmm.
You know, I want to be the Jerry Maguire kid right now. Do you know? I wish I had 3 or 4 more. I mean, that's the thing. When I'm looking to get into an investment or position trade, I mean, like I like to look at those long-term moving averages, and just to see, how's it performed? You know, when you get these deeper pullbacks, and I mean, it's been a rock star. Get those deeper pullbacks on McCormick, and it holds every time for almost 10 years. So that has me enticed. I don't know a lot. I mean, I know that they do all the spices, right? You know, that you do, you go to McCormick, you go to the spice thing and you're getting your spices and McCormick's there. I haven't looked into the fundamentals in a while. It's been several years. I'm definitely intrigued. I like the technical consolidation. I like the relative pullback into a longer term trend. Checks the boxes on potential entry. I just got to do my own due diligence on fundamentals, but I love it. What was the dividend yield again?
1.53%. So not huge, but their dividend payout ratio is only about, I think it's about 51%. So they've actually got room to keep increasing their dividend. They've increased it every year for 19 years, and they've got a lot of room in their earnings to continue to do that.
I mean, it just smells like a good position trade, the way I look at things. So I really like that idea. And listen, this is Trade Masters, but you can bring anything. I don't care if you think it is a great idea, you bring it. You bring it. And Greg, this is the moment that we've been waiting for.
Yeah.
This is the moment we've been waiting for. Can you go 5 for 5 on jokes?
Well, I'm gonna go dark, so we'll see how it turns
out. Wow. You could go for the layup, but you're like, no, I'm gonna like, all right. It's like you're going for the fences. You're gonna get it, or you're gonna. Okay.
That's right. It's either going out of Comerica Park or it's popping in the center fielder's glove. So, when does a joke become a dad joke? When it leaves and never comes back.
When does a joke become a dad joke? When it leaves
and never comes back.
I don't get it.
I don't get it either.
Absentee fathers.
Oh, I do, but
like their kids.
Oh,
Jerry Springer type crap. I told you it was dark.
Okay. Well, I don't hate
now
it.
Now I feel like I have to redeem myself. I don't mean
you went
to brag.
4.5. Listen, I was going to give you the win if you went 5 for 5. But, Tyler, I'm going to give you the win. I mean, excellent picks on both sides. I love them. Verizon, DDD, McCormick. What was your Apache? I love playing Apache when oil gets juicy, right? There's some overperformance. I love your picks, Greg. I like the clean lines of Tyler. I mean, it's all 6s. I thought there were 10 excellent picks tonight. I could have flipped a coin tonight. But Tyler, since Greg's beat your butt for like a million straight weeks, I'm going to give this one to you. What's your final word, sir?
You should award me for showing up. You should award me for showing up after all of that.
You know,
What, does he want a participation medal? Is that what I heard, Mark? Is that what he wants?
I know there were
You millennial, you. Says the boomer.
kind of give us some words of wisdom. Listen, we got unemployment report on Friday. We got Jerome Powell speaking on Friday. We got a market that's doing jack squat heading into that big event. Any words of advice?
I'll give you a bonus. I won't talk through these. I'll just give you the tickers though. Target, I would have brought up again. I talked about this one last week or the week before. I still like that breakout in Target. I still like that Dick setup with that bull flag. I like CVS on this little pullback to the 20 MA. And then pot stocks are starting to wake up, and this this MJ marijuana ETF looks.
You were right. You were right, Ty. Mary Jane.
This Mary Jane ETF. I like the bottoming action going on here. So if you want to play in pot, you got those tickers. Anyways, a lot more setups than you'd think given the sleepy S&P, but what it tells you is that if you know where to look, there are trade ideas, and we gave 10 of them to you tonight. So thanks for hanging out with us.
Everyone, we love you all. Catch you next week. And we got Cash Flow Club tonight, and we got Traders Lounge with Greg for pro members starting in about 40 minutes. You can access that on the events page at tackletrading.com. But have a wonderful night, everyone, and we'll see you next week.
Thanks,
See you guys.
You know, no, see, normally this is where I swear at Greg and Tyler and yell at them for being awful human beings, but we're still live on YouTube.
Still live on YouTube.
So I have to like withhold myself, you know. Canyon, cut us off.
We were so exciting. We put him to sleep.
We put him to sleep.
Put him to sleep. Yeah. Well, got any other jokes, Greg?
Yeah. So the one I was saying was I did not mean to brag, but cashiers always check me out.
That's a good one. You would have went 5 for 5 on that one.
I was flipping.
You got too aggressive. You know, you got too aggressive. I like that one. Right. Say that one again. I don't mean to brag.
But cashiers always check me out.
That's corny. I like it.
The more I think about your dad joke, the more I like it.
It's tough for everybody, but you know, it's a little. I knew it was dark, but I had a couple other ones, and I was like, I honestly, I had several more, and I was like, okay, do I take them or not? And then, you know.
Okay, so I'm an idiot. Explain the square root thing. I understand square and root, but how does that take out the root part of the root beer?
Well, so I poured root beer into a square glass. So the square root, right, would be just the beer.